One of the most important steps of starting a business is knowing the financial picture. So you want to start a business, you don't know anything about money, you don't have any money, you have money, don't know what to do with it, you don't know how to prioritize. Whatever the situation, this is the video for you. We're going to go into the financial picture and the financial situation. We're going to talk about income, expenses, and budgeting when it comes to starting your business. As always, if you're enjoying my content, please like, subscribe, and hit that notification bell. Let's get into it. Hey YouTube, it's your girl, The Real Teddy Talks, educating you daily on entrepreneurship, your hustling, your grind, and building generational wealth. Today we're going to talk starting a business, but more specifically, the financial picture behind starting a business. Now, starting a business can be very expensive and it can be minimally expensive. You don't need a huge sum of cash to start a business, but you do need to know what your costs are and project that out for 6 to 12 months, preferably 12 months. And you need to know your expenses as they are broken up between startup cost, one-time expenses, and recurring expenses. This is important. You're going to have a lot of one-time startup expenses as you build your business. But then once you get up and running and off the ground, I would say about 3 months in, if you're moving aggressively, then those one-time expenses should taper down, and then your recurring expenses can kind of level off. So let's get right into it. The first and most important step when talking about the money behind starting your business is talking to a CPA, a certified public accountant. Now, I know that sounds official and it sounds like there's going to be some money involved, and there may be. If you don't personally know a CPA, there's no one in your family who's a CPA who's willing to give you free advice. I'm not saying if you're a CPA, you need to give all your family members free advice, but if they have simple questions about starting their business, at least point them in the right direction, even if you don't want to give them the information free without charging them a consultation fee. I digress. You need to talk to a CPA because you need to kind of spitball the idea of what business structure you want and how you're going to track your expenses within that business structure. So again, we've talked about sole proprietorship versus incorporating. Those are the two big lumps. So sole proprietorship, meaning it's your name. You can be doing business with your real name, or you can come up with a name. So I'm Theodora, but I am The Real Teddy Talks. So I could be doing a sole proprietorship as Theodora, but then my DBA, doing business as, is The Real Teddy Talks, right? But the problem with that is if there was ever any liability issues, someone's trying to sue me, someone's trying to put a claim against me, a trademark claim, saying I stole their intro, whatever, then that's going to come against me personally and my money, my personal money, and not my business money. So as I always said, I highly encourage you to do an incorporation, and you do an LLC, limited liability corporation. You can file that directly with the state. You don't need LegalZoom. You don't need to pay a lawyer, which I have twice. I have a few LLCs, and 2 of them I hired a lawyer to do, and it was thousands of dollars, and I think it was completely unnecessary. Anyway, get your business structure together. So that way, if someone has those same claims against me, they can only subject my corporation to libel or lawsuit instead of me personally. Anyway, you need to talk to a CPA. I think it would be about a half-hour conversation, and they can kind of tell you what to expect, how you need to keep track of your expenses, what expenses you need to keep track of, etc. So let's talk about startup expenses. First, you need to establish you're going to have a brick and mortar building. That means a building that you work from, even if it's your home and you're paying a lease or a mortgage, utilities, things associated with that brick and mortar building. Or are you going to have an online presence? And if you have an online presence, that means you work from home, and in your tax filings, you can still claim some of those household expenses against your business. Or you might have a service business, and a service business meaning you're working from your truck or your car or your van, and your vehicle to get you to these services is your place of business, and you can claim expenses associated with that. This is so important because you have to be thinking forward for tax time as you're calculating these expenses. Now that you know how you're going to be working or where you're going to be working from, you need to start thinking about your startup costs. Now, your startup costs can be anything from domain registration, internet hosting, your phone bill because you're using social media as a marketing tool, any legal expenses, the consultation with the CPA, the consultation with the lawyer, those two things that you need. You can claim those all as business expenses. You need to factor in your launch. Once you finally get through all the nitty-gritty and you're ready to launch your product, launch your business, what expenses were involved with that? Your branding materials, your logo, your color palette, business cards, pamphlets, flyers. All of that is all considered startup cost. Your business licenses, your business certificates, all that can be startup costs. And those need to be categorized as such when it's time to file your taxes and so you can track your expenses. So those are your startup costs. Then we have your one-time costs, which are very similar to your startup cost, right? If you need to put a deposit down on something to get it going. If you have your monthly or annual fees, like the place I get my music from for my YouTube videos. That's a recurring or an annually recurring cost, so I need to be factoring that in. There is the place where I get my pictures for all my blogs, so I have to be paying a fee for that. Your virtual assistants, those are costs associated with something that's helping you get up. The people I use to transcribe my videos, whether you're using Rev or an actual person. I mean, it's endless. It can be as complicated or as simple as you make it, but you need to be tracking all these expenses. Then we have your normal recurring expenses. So that's going to be your cell phone bill, your internet bill. If you're working from home, a portion of your utilities, a portion of your water bill. You can determine the square footage of your home, then the square footage of your office. Find that ratio or that percentage. So if your office is 7% of your home or 12% the size of your home, then that's the percentage of utilities that you can claim against your taxes. I'm not a tax consultant or a tax attorney or whatever the official name for tax people are, but I've been filing business taxes for a long time, so I know these things. And I'll do a future video that kind of goes into it a little more in depth. But you need to be tracking all these expenses. And once you've estimated all of these startup costs, the one-time costs, the recurring costs, then you have a grand financial picture, and then you know how much money you have and how much money do you need, right? So most specifically, your first 6 months of recurring costs and your startup costs and your one-time costs, all for the first 6 months to a year. Once you have that big fat number, then you need to decide how you're going to pay for this, right? Hopefully, I was about to say inshallah, I'm in Egypt. Inshallah, you have enough money stashed away, or you can stash enough money away in the next couple of months to fund this. And you know, for my average startup business, I've done a lot of different businesses, but I would say if it's going to be a regular online business, you're looking at, in the first 6 months, easily just $1,000. I mean, that should cover most things. Your online education, all your logos and branding materials, all of the initial subscriptions you have to get to all of the email marketing, the advertising, the pictures, the transcriptions, all of that. That should be $1,000 or less. And that's just a kind of a big, broad number without knowing your particular situation. But if you don't have that money, then you need to start thinking about where you're getting it from. I did a video a couple of days ago about ways to finance your business. So there are, I would say, 3 major ways to finance your business, okay? It's going to be self-funded, a business loan, or a business grant. I think that kind of covers it. Now, within the business loan, it can be through a bank, it can be through the federal government, like through federal stimulus programs, or it can be from a friend, an angel investor, a mentor, right? I have levels of those and whether I think you should do them or not. So look back at that video. I'll kind of link it in the description, and I'll try to link it in one of the cards. But look back at that video and make that decision. As far as business grants go from the state, city, or the government, there's always going to be stipulations attached to the grant. You have to be doing something they want you to be doing and the way they want you to be doing it. And they is the people that are giving you the money that you don't have to pay back. And if you meet that criteria, then you get a free grant of money. And the best way, I think, to start your business is to start from your own pockets and your own bank account. If you don't have the money now, you need to be working towards that soon. I think a lot of us, not everyone, a lot of us spend money kind of frivolously, and we have more than enough money to do everything we want to do. We just have to kind of jockey it around and re-budget and set priorities. So that is how you start your business, and that's how you move forward with dealing with the finances of your business. To recap, the very first step is to find a CPA. Talk to a certified public accountant about your business goals and hear what they have to say. Second step, determine your expenses, your startup expenses, your one-time expenses, and your recurring expenses. Then the third step is set a budget based upon those expenses and how much money you can infuse into that budget every month. And the fourth step is figure out if you have enough money and if you need to get it. And if you do need to get it, figure out how you're going to get it. And that is the financial picture of your business. Don't complicate it. Don't make it any more in depth than that. And do it step by step, and you'll be successful. Invest in yourself just 1% a day, reach your exponential greatness, and have phenomenal results at the end of the year. This is The Real Teddy Talks, signing off.
Listen.